Hey, good morning, everyone. It's Monday morning. Jason Jenkins, Jenkins Risk Management, doing an update on the global macro. I think this is a very key week, guys, for a number of reasons, but mostly having to do with the cyclical turning points. This is a setup that's similar to 2 weeks ago Friday, but actually better because we have a weekly cycle that's is now officially rolled over. So your 2 weeks basically on the right hand side of what I call the cycle. So I'll go through it and I'll hit on some other markets, kind of how I'm leaning and what's going to set the tone the early part of this week. So yesterday or last week was a pretty good squeeze, and you're back to levels that we sold into and made a good amount of money coming into the beginning part of last week. So you have two trends. I want to point out from an 8.6 cycle count. This is a very key week. Let me take some of these drawings off here. Well, I'll leave the regressions because I'm going to hit on that next. But notice how when we cycled off the high in January, we bottomed exactly on the 8.6, which is a derivative of the pi cycle. I'm not going to get into it. And then here we are 8 weeks later with a stochastic oscillation that is rolling over as well. That's just another equation of motion. We don't really use this for overbought, oversold. We use it as a indication of time and the cyclical oscillation. So when I look at across the market, I mean, people want to compare this to the Dow in 1929, which is just amazing that all these comparisons are to the Depression now, and yet everybody thinks we're just going to V bottom and act like nothing happened. You had a 22-week rally after the initial sell-off coming off the Roaring 20s high. All right, so we're 8 weeks in here and we're already testing the major retrace levels. I mean, you would have to get the Dow above 26,000 before the talk of any type of substantial, new long-term rally. So the edge here, when we look at futures or you look at the cash market right here at the bands, this is a very good setup in our model. Anytime you get a bounce to a lower high and a downtrend at the bands is just really good location to reshort, make sales. I mean, we don't really like to go contrarian long. I mean, we've been playing the S&P long against some of our shorts that we really started putting out the last week and a half, core shorts. But yeah, I mean, if you had bought well the last 2-3 weeks, I mean, this is the spot where you have to be lightening up and thinking the other way back to the downside. So I have a daily cycle that's high. I have a weekly cycle that's high, and this is true for whether you're looking at the Nasdaq, the Russell, or S&Ps. And the weekly is rolling over. You had a 4-hour that rolled over this morning. Anytime you get those three cycles lined up, your probability and your odds go way up. That's a good setup. So I talked about we're 8 weeks in here, so we should be looking for a cycle turn this week and next. I'm going to hit on the volatility in a second. When I look across the markets, so copper's failing at the same place. I started a core short on that this morning. I'm going to sell any type of bounce in the 30-minute and hourly. Oil, we started fading last week, same trade. We've had a nice rally off the lows. I think you're going to continue to see lower highs here. That's something we'll be watching this week. And then when I look at the VIX, again, daily cycles low. It's just the inverse of the S&P, obviously. So the cycles are going to be very similar. Weekly's low, 4-hour came off. But what I want to really focus on is the machines will, they have different ways of identifying the trends, but it's going to get you, for the most part, what am I trying to say? They're going to identify the trends very similar to what we're seeing in the trend. So volatility from a momentum standpoint was high and rising for all the first quarter. And the key spot was right here when we broke through 53. After we pulled back, you bounced, you made a lower high and vol, and then the regime of volatility has been in a downtrend of lower highs, especially on the front month. And so you can see that we're in the middle of the range now, call it 23 in futures up to 35. But if and when that turns, then you start making higher highs in vol. You should see the machines really back away from the bid as far as buying equities. That's going to shift a lot of the algos and computer-based buying. In addition to, you're just going to see more selling, and then some of the fear is going to pick up, and any kind of type of gains for the last couple of weeks, people are going to start hitting bids. So that's key to watch this week. We continue to monitor the vol. Still like gold and treasuries. The volatility has been pretty much lower there, especially in treasuries. I sold some puts this morning. I'm going to continue to do that. I have some upside calls around 139 strike. I actually sold the market pretty well. Is that Friday? So we're starting to see a bid come in already this morning. And then near term, notice back over here on the regression. You see the angle for which, let me see if I can draw this. The angle at which we were rising was much steeper here 3 weeks in. And now we've continued to make higher lows, but the highs have been kind of tailing off towards, why this thing does that, towards the right of the chart. So when you start to lose your angle on your highs, that's a sign of the market's getting tired. But again, we want to see, I went over this with our group. These are higher highs. This is a phase, potentially what we call a phase 2 lower high. It's the first sign of the market wants to maybe change direction. When you're coming off a bull market, rolling over to a bear market, you've got to first stop making higher highs, and then to confirm the new downtrend, we make lower lows. So you can see that on the 30-minute chart. So there's 2 regressions here. The longer term one is in orange that I just drew. So there's a longer term location here where maybe you make a higher low, we bounce into the middle of the week type of thing. When you look at the 30-minute chart, 30-minute last week, continue to hold in front of the bands. You broke that this morning, which is new. You're at the lower end, 2 standard deviations at what we call the bottom of the risk range on the near term. So maybe we're due for a bounce on the open, but there's an edge to be shorting again up about halfway of the retrace of the move down from Asia last night. And then you can actually see this a little bit easier on the hourly. We want to see, just like I talked about on the VIX, we want to see, I'll draw this again too. So here we're coming off. We're probably in the midst of creating a little bit of a pivot here to a higher low. And then whether or not we make a lower high on the near term will be important. But what we want to see is a break and then start to make lower lows. That'll be the indication that the momentum's back to the downside, and then we can be more aggressive intraday shorting and selling rallies. So we're leaning course short. I've been looking to add. We've been pretty patient considering the bounce off the March lows. We only started reshorting our core equity shorts on the NASDAQ and the Russell. Really, last week was the first time on the NASDAQ, and then we started a little bit earlier on the Russell because we like being short the small caps. And then playing the S&P a little bit long against that. So if and when this breaks down, the idea is to add more to the shorts, and then I won't be buying the S&P anymore on dips. All right, hope that helps, guys. Some of you should join us. It's only $1. I still have $1 to come into the room for Cycle Edge membership. And that will get you in our chat room. The easiest way to do that is to go to jenkinscm.com, right here in our chat room. Using a financial chat that's similar to kind of Bloomberg, and as far as they're in the financial community. But it's free to come in there. You can ask me questions about any of our memberships, how to join the team. But the Cycle Edge membership, you can also just click right here. It's $1 to join. I don't rebill you anything at the end of the month. But you can come in and check us out. All right. Get access. All right, guys, have a great rest of your trading day. We'll see some of you in the room.